FXN Mentoring, what's up, guys? Welcome back to another week, and welcome back to Trading with Market Makers. Welcome to week 10. We are almost there. We are almost at the end. All right, so we're almost getting there. So, we've talked so far throughout 10 weeks, we've talked about market maker cycles, entries, exits, EMAs, TDIs, trading plan. We've been back testing. I've showed you trading the London session, trading the New York session. And so now, what I like to do and cover is I want to go ahead and talk about two specific topics in today's video. So, the first one is what I like to call the wheel of success. What the hell is a wheel of success? Basically, the wheel of success to me is broken up into different important segments that you're going to need in order to do this, like to really do trading, like on a full time basis, right? And it's basically the skill set that has allowed me to do what I do full time. So let's talk about it. So the wheel of success comprises of four major factors. All right. The first one is your trading plan. The second is consistency. The third one is discipline. And the fourth one is risk management. All of these have an equal important part in your success. So your trading plan, your risk management, your consistency, and your discipline, they all work together. If you take out risk management out of this pie or out of this wheel, right, is it still a wheel? No, right? If you take out the discipline portion of the wheel, is it still a wheel? Is it still going to roll as a wheel? No, right? So any part of this that you take out and it doesn't work. That's why I call it the wheel of success. You need all four of these to really do this. Okay. So the trading plan, the consistency, the discipline, and the risk management. Obviously, you know why you need the trading plan. Because if you have a trading plan that's backed up by the back testing that you've done, you already know what the output of that plan is. All you need to do is follow it. Well, in order to follow it, you need to have the discipline to do it, right? Because it's real easy to not follow something. Okay? If you see a trade setup that you know that you've seen 150 times, right, but it's not in your trading plan, but you still want to trade it, you break out of your trading plan, that's not discipline. Okay? So, a well balanced trading plan along with the discipline to follow it. And then you need consistency, obviously, because you need to consistently follow that plan, and risk management, which is a plan that I showed you guys a couple weeks ago how to properly risk manage your trades and all your setups, how you should follow it to enable you to consistently keep you out of trouble if you are in a losing streak, or how to get back on a winning streak. Okay? So, let me talk about some rules to success that I have found to be insanely valuable to me. Okay? These are things that I have found over the years that have played out to be true 100%. Okay? So, the first one is the market pays you to be disciplined. The market pays you to be disciplined. Trading with discipline will put more money in your pocket and take less money out. The one consistent truth concerning the markets is that discipline will give you increased profits. Okay? So the market pays you to be disciplined. You can change the word discipline to patient or something of that nature, because I always say that as well. It is about being patient. Letting the market play out so you could see what they're doing. So being disciplined. Another one is be disciplined with everything that you do, and the market will reward you for it. Think about being disciplined as a habit. We all have bad habits sometimes, right? That we've grown accustomed to. And we just know that they're just bad habits. But we don't have the discipline to really get rid of those bad habits if we really wanted to. Kind of like with, if you smoke or something of that nature. You know that smoking is bad for you, but you still do it anyways. You know what I mean? To have the discipline to not start in the from the get go is huge. Or even if you've been, let's say, smoking for 20 years or whatever, to have the discipline to just realize what's going on and just to stop smoking so you can become a healthier person is even greater. So be disciplined with everything that you do, and the market will reward you. This one's pretty simple. Follow the risk management plan that I gave you. I specifically gave you a really good risk management plan that literally is like stupid proof, right? Where you don't have to think about what you need to do next or how to risk your money, right? I showed you how to risk it to where you can control the risk. At the end of the day, if you don't have capital, you're not going to trade. So being able to control the risk is huge. So just follow the risk management plan that I gave you. All you have to do is just change the numbers to whatever account size you have. I believe on the example I showed you what it was, $1,000, example, $1,000 capital, as far as what you have on the account. If you have 500, change it to a 500. If you have 10,000, 2,000, whatever, you can change it. Just change the number in the capital, but then follow the exact plan to that. And just stick to it with consistency and discipline. That's it. That's it. It's just all those things are going to come into play for you every single day. Every single day that you do. All good traders follow a good risk management plan. Why continue to lose on 5 lots, per trade when you could save yourself a lot of money by lowering your trade size down to 1 lot size on the next trade? Especially if you're losing. If you're in a losing streak, there's no reason at all that you should be increasing your lot size, right? The next one is never turn a winner into a loser. Never turn a winner into a loser. How could you possibly do that? The number one thing I believe that will allow you to fail this, in the sense of really turning a winner into a loser, is your greed factor. The greed factor that you have is going to essentially have you turn a winner into a loser. This is why, like, whenever I'm taking a trade, I'd rather hit my take profit and be done and not chase it for the next, 50, 60 pips. So there's going to be a lot of moves, right, that I may miss afterwards. But to me, I don't care about missing those moves. The important thing to me is, at the end of the day, was I correct on the trade plan for that specific trade? So, did my type 1 pattern work out as I planned it to? Right? Did I get in at the right time on the second leg? And did it hit my take profit, whether it be 20, 30 pips, whatever it is? If it dropped 150 pips and I got 30 of it, and my original plan was to only get 30, then it's fine. My original plan worked, right? What happens though is that our greed, because we're human beings, man, we're some greedy bastards, you know? And a lot of times I see people that just let it go, but don't realize that it's going to retrace, right? So let's say the trade, let's say you take a type 1 sell and you sell it and you're up 35 pips. Instead of getting out at 30, you're like, hey, I want to take it longer and see if I can get 50, 60 out of it. Okay, cool. Most of the time, to go to 60, right, you got to have a retracement. And so those retracements sometimes go back, 15, 20 pips. So you were up 35, and because you let it go, now you're only up 10, let's say, you know? And so you're only up 10. Now you start to freak out for no reason because you remember you said you were going to let it go to 60. So why are you freaking out when it has to retrace and grab more sellers before it can continue to go down? So for me, that's why I'm just happy with my 30. Because at the end of the day, 30 pips could be $30, it could be $3,000, it could be $30,000. The only thing that determines the amount of money that you make off of 30 pips is your account size. That's it. It's only your account size that will determine how much money you make off of 30 pips. So if you have a small account, then guess what? 30 pips is not going to be that much, right? In the sense of money. It may only be $30. It may only be $300. Okay? So just never turn a winner into a loser. This one's really big. Earn the right to trade bigger. You have to earn your way to trading one, two, three standard lots. You don't just start automatically trading that unless you already have the account size to support it, right? So remember that to trade a standard lot size just on one trade, really you would want to have an account size of $10,000. You want to trade two lots, then you need to have about $20,000 in your account to really safely do it without taking extraordinary risk. And this is, by the way, I'm speaking about on a uh, on a leveraged account of, let's say, having a 50 to 1 leverage. I'm not even talking about 200 to 1 leverage, 1,000 to 1 leverage that some of these brokers give you. I'm literally talking about 50 to 1 leverage, what the U.S. brokers give me. Okay, so remember that you have to earn the right to trade bigger. Start small, and as you're winning, you increase your lot size like I told you to in the risk management plan that I showed you. Earn your way to trade bigger. Don't just automatically start doing it. Okay? This one's hugely important. Be yourself. Don't try to be someone else. Do not worry about someone else or what else someone is doing with their trading. I see people on the chats, and this is even on the old chats, on the Telegram chat. They get so worried about what somebody else is doing. How are you doing that? How are you doing this? Blah blah blah. It's like it doesn't matter. Like, worry about yourself, what you are doing. Are you following your plan? Are you doing what fits you? Do not try to be somebody else. Do not worry about what other people are doing in the sense of what they're, of their trading. If they make whatever, $10,000, congrats. Freaking amazing. Awesome. But don't let what other people do determine your happiness or whether or not, you feel like you've made it or not. Because everyone individually is on a different journey. Everyone's journey is different. So never, never measure yourself against somebody else. Okay? Be yourself. Next one is follow your trading plan. Follow your trading plan. It's pretty simple. If you have a plan that you've written down, that you've back tested, right? And you've back tested the plan, and you know specifically that it puts out 75, 70, 80%, whatever the percentage is, over 100 trades. You know what the plan is doing. You know what the plan has done previously. So what's the problem? Follow your trading plan. There's a reason that you're doing all this back testing. There's a reason why you're journaling all the trades that you're taking. Because you're proving to yourself that the plan that you have will actually work. That's the whole point. If you know that your plan actually works, you're more likely to actually follow it. But you're still going to need what? The discipline to actually follow the plan. And if you can have the discipline to follow the plan, guess what? You're going to be consistent. See how that works? You're going to be consistent. That's the whole point. Remember that we're not here to do this for a week or month. We're talking about literally doing this for years. For years. You can't just wing it for the next 50 years. Right? You got to have a plan in place that you know works. That way you can follow it. At the end of the day, like when you're really going and you're following your plan and you're being consistent and disciplined and stuff like that, like really trading should be boring. Trading should be boring because you're going to keep doing the same thing over and over and over and over again. You're going to feel like a robot. The market's going to be very black and white. It's either there or it's not. And that's the whole point. Because then you're going to take out the emotion or the emotional side of trading out. And you're not going to fall to the pressures of emotions and emotional trading that the majority of retail traders fall into. So follow your plan. Make a little bit every day. Dig your ditches, don't fill them. Okay? Make a little bit every day and just dig the ditch, but don't fill them. It's amazing how quickly your trading account will grow over time just by making a little bit every single day. And that's called the compound effect. If you're making 30 pips over and over and over and over, and the losses that you're taking are 10, 15 pips, 10, 15 pips, 8 pips, 7 pips, if you're limiting your risk per trade and you continue to follow 2 to 1, 2 to 1, 2 to 1, 2 to 1, 2 to 1 risk to reward ratios, you're going to make a little bit every single day. It's going to all average out to you making a little bit every day, a little bit every day, a little bit every day. And that's just going to compound. Okay? It's just going to compound over time. Over time. This next one, I think is one of my favorites. Hit singles and not home runs. Literally, when you go up to trade, your goal is just to hit singles. It's not to hit home runs, meaning like we're not here to catch every single day 100 pip trades. Right? Are we going to catch some of those sometimes? Yes. You should catch some home runs. But the majority of the time, you're going to hit singles over and over and over and over and over again. Right? So singles to you, if you're trading, let's say, London session, might be 30 pips, 30 pips, 30 pips, 30 pips. Are there going to be times where you catch one that goes 50 pips? Right? And you can consider that like a double. If if you use the baseball methodology, hit singles over and over and over again, 30 pips, 30 pips, 30 pips, right? You get one that maybe hit 50. Cool. Now that's a double, right? And then a couple weeks later, you hit one that hit 75. Like boom, that's like a triple, right? And then a month or two goes and you hit one that gives you 100. That's a home run. Right? But you're not gonna hit 100 every freaking time. Your goal should just to be get on base. Just hit singles just to get on base. Over and over and over again. There'll be times where you hit it and it's gonna go 50 or it's gonna go 75 or 100 pips. And that's awesome. And that's great. And I hope that happens every month. The reality of it, though, is that it may not happen every single month, but it will happen. But as long as in the mindset of yourself, you just continue to always just hit singles, boom, 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 you'll just hit a little bit every day, over and over and over again, and you'll start to build. This one is controversial to some. Is love to lose money. You're like, what do you mean love to lose money? Maybe it should have used different wording, but here's what I mean by that. When I say love to lose money, I mean to accept the fact that you're going to have losing trades throughout a trading week or a trading month or even a trading session. Okay? Get out of your losers quickly. Love the process of getting out of trades quickly if they're not going in your direction. Hence why we have the 6 candle rule. Because if you're not in profit in 6 candles, the move that you think should have happened should have already happened by 6 candles. And if it didn't happen, guess what? You're probably not going to be right. So get out, right? Cut the loss already. Cut it quick and just move on. It will save you a lot of trading capital and it will make you a much better trader. So love to lose money. Cut the losers out quick. That's why you hear me say a lot of times when we're back testing in the Sunday group session, when I take the trades, if I'm wrong, like I would rather it take me out in the next candle, right? Because if I'm wrong, I'm wrong. I'm cool with that. Just take me out already. I don't want to drag this thing on for 8 hours. Take me out. If I'm wrong, I'm okay with being wrong. But I'd rather be wrong right away than have to wait, 4 hours to figure it out. So that's why I implement the 6 candle rule. If I'm not in substantial profit within 6 candles, I'm out. Break even, whatever, 10 pips plus. I mean, I'm just out of the trade because what I thought was a good pattern, a good second leg, clearly was not. Because if I was correct in the second leg of a pattern, then I should be well into profit. And if I'm not into profit, that just means that I was just wrong on the second leg. And I'm cool with that. I'll just get out of the trade and wait for the better opportunity or look for a different pair that possibly has a good trade setup for me to trade. So, love to lose money. Consistency builds confidence and control. This one's very simple. This one's pretty simple. Consistency builds confidence and control. When you do something over and over and over again consistently, automatically you're going to build confidence and you're going to build control. Think about when you start a new job or when you get something new that you've never, messed with before, like a new computer or something like that. Or let's say switching from Android to an iPhone. When you first get an iPhone, you're like, holy crap, I don't know what to do with it. Or I don't know how to do some of the basic stuff, right? But as you consistently start to use it, a month, 2 months down the road, you're going to be pretty confident and in control of what you're doing on that iPhone. Same thing if you start a new job, right? You don't know what you're doing at first. Somebody has to train you when you first start a new job because you don't know what you're doing. They give you what, like 2 weeks of training, 3 weeks of training? But then after that, they've given you the pretty basic building blocks of what you're expected to do. And then you start going out and doing it consistently, right? 6 months down the road at that job, you're pretty confident in what your job is. You have pretty good control about what's going on with that job and how to do the job that they're paying you for. It's the same thing. It's the same thing. Consistency builds confidence and control. All right, and this last one. Don't overanalyze. Don't procrastinate. Don't hesitate. If you do, you will lose. So there's 3 major things there. Don't overanalyze, right? So don't overanalyze the charts. Don't go to a chart and literally spend like 20 minutes trying to figure out what the hell is going on. If it's taking you that long to figure out what's going on, you probably shouldn't be trading that chart. Or it's probably a pair that, you haven't looked at before. All of the trades that you should be taking should be on charts that you're familiar with. Should be on charts that you understand what's happening. Okay? Don't procrastinate. Don't hesitate. These two particularly pertain to entering a trade or exiting a trade. If you see a trade that meets all your requirements, don't procrastinate and don't hesitate. Take the freaking trade. Same thing as if you entered a trade and you're sitting there like, why isn't this moving? And you're past 6 candles, like, don't hesitate, don't procrastinate, get out of the trade. Like, there's no point in you staying into a trade that you're wrong about or that you have to wait 8 hours for it to start moving. So don't procrastinate and don't hesitate on both the entry and the exit. Don't overanalyze. Okay? This is why you're doing so much back testing, so many weeks of back testing, because I need you to figure out what pairs are you good with, what pairs you're horrible with. There are going to be pairs that you're just bad at, and that's okay. I have pairs that I'm freaking horrible at, and I just don't even look at them. I have pairs that I absolutely love, and those are the ones that I trade the most. So, the main goal of your back testing is to get to know you, how you are as a trader, and for you to find out which pairs you're comfortable with, what pairs you understand, what pairs you vibe with, versus what pairs you don't. And the ones that you don't, get rid of them, cut them, delete them from your screen so you don't even look at them, right? Have like only the five main pairs that you care about, that you really understand, that you know what's going on with them, that you find easy to follow. When you're marking up the charts of finding peak formations, peak formation highs, lows, resets, and all that, what out of all those pairs, there's a bunch of pairs, which five of these pairs have you found to be really easy to find, to follow, that you've been right the most of the time with trying to predict peak formation highs, lows, resets, failed resets, and all that stuff? The ones that you find that are easiest to follow, those are the ones that you should be trading. Those are the ones that you should be trading. Do not waste your time on pairs that you don't understand or that you can't follow because somebody else likes to trade that pair. Okay? Whenever I first started trading, everybody was all gun ho on Euro USD, all gun ho on USDJPY, all gun ho on USD Swiss. To me, those are like to me personally, those three pairs are awful for me. I don't like trading those pairs. It's not that I can't follow them, I just don't like the way that they move. I just don't vibe with them, right? So find the pairs that you vibe with, and those are going to be the ones that you stick with. Those are going to be your ride or die pairs. But you got to find them. Guess what? The only way to find them is through backtesting, man. There's no way around it. The only way you find those pairs is through backtesting. But I promise you, once you find those pairs, you ain't looking at any other pair because you don't care about any other pairs. Once you find your 4, 5, 6, or whatever, how many other pairs you find that you vibe with and that you follow and that you understand what's going on, you're not going to care about what's going on in the other 28 pairs. You're not going to care. Okay? So, now that we've gone through the rules of success that I found to be very just helpful to me and the wheel of success, let's talk about how do we put all of this together? How do we put everything that we've seen over the past 9 weeks, how do we put it all together? Okay? Let me show you on a chart how we're going to put it together. All right, so let's switch over to the charts and let me show you. All right, so now we're back on the charts. Here's what we're going to do. Let's put everything together that we've gone over the past 9 weeks. And let's just start from the very beginning. So let's do why don't we do a pair? I'm going to do a pair that I haven't done before, right? So a brand new pair that I don't look at and I don't freaking trade. So let's do like a real odd pair. Let's do, what's a really odd pair? Let's do AUD. Let's do AUD and NZD. So let's do AUD NZD. Okay. And so the first thing I want to do is let's go ahead and shrink this stuff first of all. So let's shrink it all the way down. And then what we're going to do is let's go over to the beginning of the year. And we'll put it right there. So we're going to start at the very beginning of the year. Now remember, when we get to a brand new chart, right, what is it that we must do? What do you think is the first thing that we must do when we get to a brand new chart? Right, we have to figure out where the hell we are, right? Where's our peak? What directional bias we have, and things of that nature, right? We got to figure that out. So if we started out at the beginning of the year here, all right. So first things first, let me see what our ADR is, so we can get a range here. All right, so it looks like we're averaging about 52, 53, 54. So around 50, let's just, say 52 or so. And, all right. So that's going to be about 156 pips or so, give or take, right? So just going off of that, let me turn on the lines here just so I can get a better idea. All right, so clearly this is going to be our peak low, okay? I'm going to say, without even measuring stuff, I'm just going to start to put some blocks on here just so we can see how either correct or incorrect I am. This is definitely going to be a low here. At some point, this is probably going to be a high. All right, let's measure this stuff out here. So from here to here, perfect, 150, okay? This is going to end up being a reset, we know. So how do we break this up? So here, perfect. So from the very bottom of this reset to the very top here is only 200 pips. So if we take 200 and what did you divide, 53 to it, that'll be about 3.7 times ADR. Perfect. So here's what we have so far. We have from here to here. We have from here to here. And that's it, right? So we're coming off. This looks like it's going to be a reset. Or either a reset or a failed reset, one of the two, right? Because it hasn't actually passed this yet, so it could still turn out. All right, so we know where we are, right? We're coming off of a potential either reset or this is end up being a failed reset. So now we know where we are. Let's go ahead and let's turn on the indicators here. And let's see what we got here. So let's start to play out this on a 15-minute chart. And let's see what we get here. Because right now, let me see. Let me put a line here real quick. Yeah, so we'll see how this looks at the beginning of London session. Because depending on how this looks at the beginning of London session could determine how we're going to look at this. Because right now, we could get technically a failed reset. This could be a sell, or this could be a reset. We can look for buys. So we really, right now, don't have a directional bias, right? So we really have to wait and see what price action does and gives us essentially as potential trade setups. So right now my mind is essentially it could go either way. Okay. So let's see what we end up getting here. Yeah, and you could see here, you could see the TDI here actually gives us a good pointer because it's actually in the middle. Do you see that? So here, let's play this real quick. So first things first, came out of the middle, right? Meaning for me that it's got to come either to the bottom or to the top for me to do anything first off. So I'm not even thinking about any setups until it does that. See, it's just sideways action, nothing. There we go. Now we get something. See, so now we get our first push down. This is what we want in the sense of now we could start to, maybe look for setups. So let's see what happens here. Right now, I'm probably thinking a sell of a type 3 for the simple reason that it's scared of this middle. Right, it's scared of this middle. And because we don't have a real directional bias as of yet, we can't really say, hey, for sure we're gonna do this or do that. We have to let price action show us the setups essentially. But let's see. I mean, nothing throughout the London session, so that's fine. Okay, so here it looks like to me we could be getting I want to say a type 3. I don't want to say continuation trade. I want to say more of a type 3 trade in the New York session because, again, we're tagging the middle of the range. Right, we're tagging the middle of the range here. So that's what I would be waiting for here. Is that. Now this is a railroad track though, but this is like super early too. So if you're the one to go in super early, this technically right here would be a setup really. You'd be looking at something like this, 2-to-1. You can get a 3-to-1 by just going to the 200. That right there could be a simple setup right there. You have a railroad track, type 3. It's really early. The only thing that I don't like about it is that it's really early. But at the same time, it's been moving sideways the entire London session. So whenever I see this kind of behavior where price is moving straight sideways during London, I know typically the majority of the time we should have a move. The move itself should happen in the New York session. The question is this it or is it not it? Right? So let's see what happens here. Yeah, see, here's the, for me, would be the entry. If you took this trade here, you're 1, 2, 3, 4, 5, 6 candles in, and you're not in substantial profit. You're only 4 pips up, right? If you wait, here is, let me change this time here. I don't know why this is, this right here is what, 9:45. This is right at the opening of the U.S. markets open. So my trade would probably look something like this, and I would have to go to the 800 EMA. Now, the likelihood of it going to the 800 EMA is actually quite high for the simple reason that we had basically sideways movement. Sideways movement throughout London session. So we didn't get any kind of push at all throughout London. So New York session basically is going to have the bulk of the movement. Okay. So I think the real question is, do we get a pullback on the next candle? Because that'll just help us with the entry. So we do get a pullback. So the pullback would give us the entry here. And then now we're about 8 pips of a stop loss. Now we're looking at a 3.5 to 1 risk to reward ratio trade. Okay, we're bouncing off the 50 on the TDI as well. We can use the EMAs as take profits. The pattern is there. We have a second leg actually on a type 3, which normally we don't get too much. So let's see how this plays out. So we don't make it to the 800, or does it? Let me see. It does. Okay, so it does make it just like friggin' 2 o'clock in the afternoon. All right, so based on this movement here, actually as well, this might help confirm that we may have a failed reset here. Let me go up to a 1 hour time frame real quick. Now we haven't had the cross yet. Looks like we're about to have it. Looks like we're about to have the cross here, which would help confirm this as a possible failed reset. So then that'll give us basically a directional bias here. All right, let's continue on here. And we're going to trade both London and US session. We're just going to go through this whole thing. Let's see. Again, coming out of the middle of the range. There we go. Now we went to the top. So if we went up to the top here, okay, you play, yeah. So if we went up to the top here, there's really only a couple of options for me, right? And this is heavily going to depend on, again, what is your directional bias, right? And so if we go up to, let's say, the 1 hour time frame, it looks like this crossed here, but I don't think it's going to be it's bouncing off the 800 here. I would say for me, the only pattern that would make sense to me, because of where the 200 and the 50 is a type 3 pattern. And so one thing that I would probably look for in the TDI itself is, do we get a kick off this 50? Because if we get a kick off this 50 here, this might help prove my point here. But if it doesn't, it goes straight through, then we could see a second leg here off of a first. But regardless, just be patient, let them show you. Okay, so here what looks like we could get, if we get a blue candle here, if this next candle is blue, that'll be a star pattern hitting right the middle of the range. That should cause this to hook, and that would be a type 3 pattern. Let me see, what is the next one? Kind of like a little, it's like a little baby, what you call it, a little baby type 3, right? little baby type 3, or a little baby star pattern, excuse me. That's not really a star pattern though. That's too short. Look at that. Oh, look. Boom. See that? That's it right there. That's it. This is the pattern right here. You see how it's bouncing off the 50 on the TDI? So for me, this is a buy, but I have to get a pullback. There's no way. Yeah, I would have to get a pullback. And I mean, that pullback is going to have to be somewhere maybe half candle, at least half the candle, I would think. Because for me to get a 2 to 1, let's see, I'm going to have to go, I'm going to have to go use yesterday's, like, this little structure here of yesterday. So, like, down here, you see these highs, boom, 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 all these taps to that same area. I'd have to use that. So somewhere around here would be my target. But this trade only works if I get a pullback. It's the only way that this works. It doesn't work if any other way. Because if you go all the way up from the top here, it's 13 pips. I mean, it's still within, but now look what it does to your risk to reward ratio. Now you're gonna have to move all the way up here to basically tag the highs of the week. Essentially, is what you're asking it to do. So for me, I'd have to have a pullback. That's just way better for me, because that looks like a way better trade. So a pullback at least halfway up the candle, I would say. Boom. Damn. That was close. I mean, it went right to that. Look at that. Shit. That was pretty close. Was that 1, 2, 3, 4, 5, 6? Okay, so the 6th candle is this big blue candle. So I would still be whatchamacallit, still good. That's not good. Is this gonna bounce off the 50 here in the US session? Yeah. This looks like it's going to be a bounce off the 50 here, like almost like a continuation trade, but really it's not. It's just bouncing off the 50. I bet you this thing bounced off the 50. No. It bounced off the middle of the range. So this was a continuation trade if this goes on. If this goes all the way to the top here, does it? Let's see. It does. Yeah. So this was, in the US session, this was a continuation trade. So you see the big retracement. And I thought it was going to get stopped here by the 50 or even the 200. There's two EMAs there, but look. It went right where? Right to the middle of the range. What a coincidence. What a coincidence, right? What a coincidence. So this trade here, if you're trading the US session, this is a railroad track right here. So, I mean, that would have been a 3 to 1 trade. So this trade here, this original trade here, if it got you into this on this little pullback candle, you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I don't know. This is going to be kind of hard for you to stay in, especially when it dips all the way down to here. I'm probably going to get out of this trade anywhere after here. Like, I'm just getting out of this trade, you know, for me. If I get into this trade here, I'm getting out here. Because at the sixth candle, right, I'm actually in profit. I'm in profit, like, pretty good. You know, I'm more than close to 1.5 times in profit already. So I wouldn't think anything of it. You know what I mean? But once you start going all this back retracement, like crap, like I don't want to be stuck in this. Should have been already gone. Okay. But look what it did. It went all the way back up again. So yeah, this thing is just like moving straight sideways now. Interesting. Make this bigger. This may not be the best pair, but we're gonna ride with it. Coming out of the middle again, so I'm not gonna do anything until it does something. There you go, to the bottom there. So this, yes, before 3:30. So could this be a trade out of the edge? Is what I'm thinking. Could this be a trade out of the edge? First leg here, second leg here. Pinning to the 800. You know what? If you zoom out, right, this to me is just moving sideways. I just noticed that. Like the whole week. Boom, boom, boom. So let me put a line here. It's kind of like the low of the week so far. And this is the high of the week. So there's your range. Here, let's see about this. So because of the pip is so low, like I would put it below the 800 here. That would be only 5 pips anyways. And look, just to get to the 2 to 1 is basically the middle of the range, right? That would be a 2 to 1 trade right there. Let's see. And you get a pullback on the next candle. So that's even better. So, I mean, just now it went from a 2 to 1 to over a 2.5 to 1 risk to reward ratio on this. Damn, and you had a bigger pullback. Boom, look at that. One candle to take profit. If not, that candle took profit for you. So there's one trade there. Let's see what the US session has to play. I was gonna say this could be a good second leg here, but the wicks though kind of throw me, like to a sense where I don't want to trade it. Yeah, and it seems like it just gets stuck here at the 50 also, so I don't know. Yeah, see, wick to the 50, wick, wick, wick. It's just wicking it up. All right, let's go. So yeah, so this week here may not be a good week to trade because you could see what 3 full days in, we've literally just been consolidating, right? So here's what you could end up getting sometimes is something like this. This may happen on one of your popular pairs where you're waiting for a directional bias, right? Because theoretically, you're still if we go up to the 1 hour time frame, look, right? You're thinking that this may be a failed reset here, but because it's going sideways, you really don't know yet. And that's, kind of like the conundrum, you know, is that you really don't know yet because it's just moving sideways. So this is like a real life thing. So I'm kind of glad it's not just easy, this particular week here. So that way you can see what I'm thinking as this crap is playing out, because um, this is not the best, cool looking example of like, yeah, this is how it works perfectly all the time. It doesn't. And here you could see why, right? That it doesn't work perfectly all the time. And sometimes, in some pairs, some weeks, it's just going to be pretty challenging because of it moving sideways a lot. Basically, consolidation. It's a consolidation week. Okay. But with that being said, if you get into a situation like this where it's consolidating a week, right? And the week that I'm talking about is like a Monday through Friday, right? If you see it moving sideways like this, it's basically an accumulation, okay, on a bigger time frame. So the best thing to do on weeks like this, where it's just accumulating and you see it just going sideways, and you can tell because you're seeing all the EMAs go sideways as well, and you could see how the TDI is just moving sideways. Also, it's stuck right at the 50, just going back and forth, back and forth, back and forth, back and forth. The good thing about it, though, is that whenever you have a week that's like this, I call this an accumulation cycle. For a cycle of a week, Monday through Friday. And all that is just basically when it moves sideways like this, boom, 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 doesn't do anything. Is that always at the end, there's going to be a breakout, and that's going to be the best part. And that breakout is what's going to get you out of this conundrum of either a failed reset or a actual like real reset. So when that breakout happens, we don't know. That could happen Thursday, Friday, or it could happen on Monday of the next week. We'll take a look. All right, let's play this out here. Let's see what happens. All right, so let me stop it here. So if you're looking at this, what are the only possible solutions for a trade here based on where price action is? Think about it, right? The best possible trade is a buy setup. For me, would be a buy setup that pins this 800. Okay? The only sell option that I would see here would be a type 3 that pins a 50. That's it. That's the only sell option for me that I would see here. The best option, I think, would be a buy option that pins the 800 here. Okay. Yeah, you see how you see this? Look at the behavior. Pin, 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 pin. It's pinning the 800 over and over and over again. Now, there's not a setup yet, right? Because you would want some kind of a big candle to push out of of this smaller consolidation. But you can see the TDI now is building and going lower and lower and lower. So that's a good thing, actually. This kind of helps confirm, a possible trade setup there. All right, so I'm thinking that this is probably going to maybe be a multi-level or a multi-session type of pattern is what I'm thinking. Multi-session. Yeah, I think this is right. You see how it worked? You see how it slowly worked its way down to near the low of the week? See how it worked its way down pretty near the low of the week? The actual candles here are like right here. The actual bodies of these two candles are here, and then the next day the bodies are like right here. So it's all within that range there. So that's good. If we get a blue candle here, this is a good star pattern of a second leg. So basically you'd have a star pattern on the first leg, 1, 2, 3, 4, 5, and then boom, a star pattern on the second leg. That would be a really good setup. There you go. There's your setup. Here's your TDI with a good confirmation. So now, what do we need? I think we would need a pullback, wouldn't he? Because this, let's see, 12 pips, and then we'd have to go to the high again. No, you'd have to go pretty high. So, yeah, we'd have to do something like this to get this to work. So that's not going to work, I don't think. A 2-to-1 would be like literally right here, so we really would need a pullback. Let's see. The ideal pullback would be if we can just get up to the top here or around this range here. So that at least that far of a pullback is what we would need. Nope, didn't get it. Damn. See, and it went right to that freaking line too. That sucks. All right, let's go to the next day. Yeah, same thing. Look, I mean, you see the whole week just sideways. Nothing moving, but sideways. So the whole week has a sideways movement. All right, so it's Friday. It's Friday. So the setup's got to be pretty good on Friday for me to take the trade. All right, so I mean, clearly for me, the way that price action is up there right now, there's only going to be one option for me, at least for me to take a trade. I would have said a type 4 that bounces off the top here, but now with this candle here, it's going to be a type 3 that bounces off the 50 or the middle of the range is what I would consider a good trade. Pullback right there. So right here would be the trade setup is a type 4, right, where it goes up, we can't, obviously we can't get in on this candle, but it comes back to retest that. And we have this candle here that matches, that gives us our completion, and then we get the pullback here. So that pullback would be our, and we could, I mean, hell, we could just go right here to the top here, and that'll be a 2-to-1 trade. Almost made it. This was very unforgiving, this pair. That looks like a continuation trade right there too. Like a type 4 continuation trade. So if you fail the first time, just try again. Try again. Star pattern, type 4. And there's a 2-to-1 right there. Basically the weekly high. Yeah, the weekly high basically. So if you fail, try and try again. You get a better pullback too, damn. There we go. There's our breakout. There's our breakout. So, let me just stop it right here then. That would help confirm what? A reset. This is a reset. It only took freaking a week to find out. It only took a week to find out that this was a reset. So there we go. So now we have, the good thing is though that now we have our directional bias. Right, now we have our directional bias, which is good. All right, so let's move on to the next week, because now that we have our directional bias, we know we're looking for buys. All right, so let's do this. Let's project out, just so we can get an idea as to where we could go to here. Let's do from the bottom to the top here. It's 117. So 150, which is 3 times 80 yards, about 107,800. So let's mark this up here then. Let's mark that. So at least we know where we should be starting to watch out for 3 times ADR. All right, so again, now we have our directional bias. I'm only looking for buys. I don't care about anything but just look for buys. That's it. Now I think it's going to get a whole lot easier now. But this is a good example though of sometimes the rough, you may have a rough week. And that's okay. Totally okay. Oh man, come on, boom. All right, so I'm looking at this. If I'm looking for buys, think about this. I'm looking for buys. Goes up, tags the top, and then comes down. Coming down to the middle. For me, obviously, the best setup for me is obviously going to be a type 3. Okay, a type 3 setup is going to be the setup for me. So that's what I'm looking for, is a type 3 automatically. Love me some type 3s. Boom. Bounced off the 50. Didn't even make it. The 50 prevented it from making it to the middle of the range. That pullback is not big enough, by the way. Yeah. No, that pullback's that's way big. That's too big. Too big of a risk. I know it's only 11 pips, but this pair doesn't move very big anyways, so. Now, interestingly enough, though, notice how the pair, it made a huge move, but what is it doing now? Coming back and retracing. See that? So if it's coming back to retrace, I'm looking for a continuation trade or an opportunity to buy again. Question is it going to go all the way down to the middle this time like it did before, or is it going to hang around the 50 here? Right there, boom. There's your 50. Come on. Right there. See it? There's your star pattern, God mode, whatever you want to call it. That's it right there. So now, that's a 7 pip. And I take it to here is 2 to 1. That's one trade possibility. Second trade possibility is if you get a pullback at all, let's say, I don't know, let's just say half the candle, then you'd be looking at something like this. And still taking to the same thing, but now it's about 3.5 to 1 risk-reward ratio versus a 2 to 1. See the difference see what the difference the pullback can do? Huge. Huge difference the pullback can do. Let's see. You get a little bit of a pullback. Not really that much. So essentially a 3 to 1 is what you went from a 2 to 1 to a 3 to 1 now. There you go. I didn't even have the TDI up, but you could see the TDI curved down, cross. There's your crossing at the same time, right there. All right. Let's go to the next day here. All right, so same thing. Still looking for buys, right? We're getting pretty close to 3 times ADR, but still looking for buys. So let's see what we get here. Again, coming out of the middle. So this right here is a railroad track, but again, it came out of the middle. Don't like it. Damn, look at that move. It's a really nice move. Really nice move. Man, look at them candles though. Okay, what are your only options here for any setup in the US session? For me, it would be a continuation trade. It's the only option I have. Right. So that's it. It's the only option that I have is a continuation trade. either like a type 4 continuation that bounces off the top and also has a 50 right there, or if it comes like all the way down, here and bounces off the middle of the range. I don't know. But that's going to be the best option. The question is, because you don't have, you're going to have to go back to even look at where, here we go, where structure is at. Yeah, so you don't even have any structure right now to follow anyway, so here we go. Let's see where we go to here. Let's see what we get. There you go. There's your railroad track there, but you need a pullback. You need a pullback. We need a pullback off of that. Look at that, bounce off the 50 there too. Probably something like at least half the candle, something like that, and then you could go 2 to 1 here. You're pretty close to 3 times ADR here, so that would be close to over 2.5 to 1. But let's just go here and see. But you need a pullback though for this to work. Oh, not enough. Oh yes, there you go. You get 2 pullbacks. Come on, go. No. That sucks. So you were in 1, 2, 3, 4, 5, 6. So 6 candles you were up over, 1.5 close to. So same thing. Once you get to here and then on this pullback here, just cut the loss, cut it out. Like, I know obviously it went higher now, but just cut the loss out here, because you're no longer, in substantial profit. Now you're at break even, but you're over 6 candles, right? So just cut the losses out, because you're at the edge of the U.S. session anyways. So just cut it out and move on to the next day. All right, so what is this? Wednesday. So here's an interesting situation on Wednesday, because on Wednesday we end up getting the spike here. That's probably like pretty close. Let me see. Okay, we haven't crossed over yet, so I'm not going to worry about it. So still looking for buys, because we haven't crossed over yet on the 1 hour time frame to confirm a first leg out. The only thing that I was thinking about is this spike here could be like a spike to create a peak formation, but yeah, regardless, I'm still looking for buys. So let's see what we end up getting here. There we go. We could get a type 4 here. This could be a type 4 right here. Stop loss can go below the 50, and essentially we could go anywhere basically to the 3 times ADR line here. but 2 to 1 is right here. Let's see. And we get a pullback too, so that's even better. So that saves us some more pips there. So now it's almost a 3 to 1 risk reward ratio. I was going to say, if that high holds here, see how it keeps spiking, you could get a possible reversal. That could be the case. Possible reversal for the US session. But the reversal would be a short-term trade, in the sense that you're still would be looking for buys, although you're right at the 3 times ADR, so let's see. There you go. But obviously that's too big of a candle anyway, so I don't think it matters. Yeah, here let's move on. Yeah, look at that spike. This was maybe some news. Had to have been some news there. So what do you do in situations where, like you are now, right? I'm at a situation where I'm like literally at the top of what I think is, the 3 times ADR part, right? So I'm already here and I'm thinking that it's, pretty close to the 3 times ADR part. What do I do? Well, honestly, I wouldn't do anything. I'd just keep until this tells you that a peak formation has been created. Like, I still look for buys. Okay, so I'm still looking for buys because we haven't created a peak formation. So if you look here, like, we haven't created a peak formation, right? We haven't crossed over. Like, look how far away the 50 is, right? We're not there yet. So until that happens first, like, that's when I change my bias, right? But right now we're literally at perfectly literally 3 times ADR. But we know we can go up to what, 4.5, right? So what's 4.5? What's 4.5? So let's do the math real quick. What is and you can see the numbers. The ADR has actually been getting smaller too. So what about, I don't know, let's look at structure real quick. Let's go back and look at structure. Where is the closest structure? Wow, it's all the way up here. All right, so here's structure right here, right? I'm just gonna outline it here for you. This line here and this up here. OMG, come on. There we go. So there's your next portions of structure, of higher time frame structure, right? The reason I'm counting this here is because price is reacting here, right? So price reacted here, but then also reacted here, right? So you had this, that, right? So you could draw literally a perfect line right through there. And this is obvious because that's the next point where price got rejected from. right? So all I'm doing is I'm just drawing where price got rejected from, off of a higher time frame, a 4 hour, daily, whatever. But I'm just looking for anywhere where I could just draw a line to show me where I'm at now, where there's structure, from the past. Because typically price does go to structure. This is where liquidity is. You know what I mean? So now what I could do is, let's do this. Let's do the math from this bottom to this top here is 207 pips. So let's say 207, and we divide that by, let's say, 50. So if we make it to that line, that would be like 4 times ADR, right? 4 times ADR if we make it to that line. And this line up here is 263. That's going to be way too much, I think. Let's divide that also by 50. Yeah, it's 5 point something. So that's way too much. So here's my thinking, is that if for any reason that we pass this, if we pass this line of 3 times ADR, the likelihood is going here, and this is going to be probably the highest that it's going to go, because higher than that obviously makes it more than 4.5. Hopefully that makes sense, right? All right, so let's see what we got going on here. Let's go to all right, so until we get a confirmation that a new peak has been created, right, we're still looking for buy setups. That's it. You still look for buy setups until the peak formation has been confirmed and created. If that hasn't happened yet, then you're not a magician. Don't try to, magically, oh my God, it's perfect 3 times ADR. Now the peak formation is going to form, let it form first. Once it forms, then you can go ahead and change your directional bias. Okay. But until that happens, it just doesn't make sense to do it. So same thing here, coming out of the middle, right? So it's nothing. I won't trade that. It went to the top. There you go. No. I'm just going to let it go. Let it go. Let it go. All right, so this is going to set up what? What is this setting up? A huge move early on, and then a huge retracement right before the US session. That means what? For me, it means a continuation trade would be the trade setup that I'd be looking for. So continuation trade setup is what I would want out of this, is what would make sense to me. Boom. What do you think? What's the pattern? Let's first talk about what's the pattern. Railroad track. Okay. Type 3 continuation trade railroad track as a buy. TDI is below, just about to cross over. What does that look like as far as risk to reward ratio? I'm thinking, can we make it to the top here? Yes, we can on a 2-to-1. So the trade setup would be something like this, unless we get a pullback on the next candle. If we get a pullback on the next candle, it's even better. So let's see the next candle. Oh yeah. Oh yeah. So there. So anywhere here would be your entry on this because of the pullback. Anywhere on here is the entry because of the pullback. So that's fantastic. So I mean, literally like 3-4 pip stop loss. And let's say if you're just going back up to where you originally came from, I mean, you could play it safe and just go to, like, let's say the bodies instead of the wicks. I mean, you could do Shit, you could do 4 to 1, 3 to 1. I mean, it's endless, right? The possibilities of what's out here. Let's just do like 4. Anything after is good. Possibility of potential of like 6.5. But let's just go to 4 and maybe try to squeeze out 5.5 if we can. Something of that nature. Let's see. There we go. Come on. Go, go, go. Come on. That pin bar would do it. Yeah, I think that pin bar would do it. Damn, how about that? Right to that goddamn pin bar. This one went up to what? The high is 79.11. I'm just looking at these numbers up here. 79.11. 79.08. So yes, this one went to 79.11. This the take profit was 79.08. So yes, it would have hit. Nice. All right, Friday. So we're riding the top of the what you call it, of the 3 times ADR there. What will that be? This would be 1, 2, 3, 4. I wouldn't consider this. Yeah, this doesn't look like a clear pattern to me, so I'm just gonna leave it. It just doesn't look clear to me. I'm still looking for buys, by the way, because we haven't had a peak yet, so. And so you can see, what are we doing? We're just moving sideways. Just moving sideways. Just straight moving sideways during London. So you see how the TDI there is just binding up there in the middle? Let me pull it up here. So yeah, it's just literally straight in the middle, not doing anything. Boom. What do you think here of a buy? I'm trying to think, what pattern would that be? Would that be a continuation? No, because it really didn't move that far down. Like a continuation trade would be like down to here. Like you want to more move down here. I don't think that would be a continuation. I don't think that'd be a pattern at all, actually. At least I like the continuation trades to come further down, you know, come further down and then go up. This isn't that much of a big move. Like that. This right here. Boom. There you go. That's pretty good right there. Yeah, look, it's just tagging, tagged. See how it came all the way down? Tag this, tag that, tag. Look at all these tags down here in this area. All of this, you can draw a big ass square on all this here. This is all liquidity, all the way down to here. You see this pin bar going all the way down? That entire block is an area of liquidity. That entire block there. All right, well, the question is this railroad track even 8 pips? Where would you have to take it to? Oh, the weekly high. Let me guess. You're gonna have to take it back here. Yeah, you're gonna have to take it all the way up to these highs here. I don't know. It would have been nice if you got a pullback, like one more pullback. Even that one. Same area though. I mean, it does go there, so I mean, the trade is good. This thing goes even higher. So you see how we're like already above 3 times ADR. So I don't know. I mean, I think the likelihood maybe that we go up close to 4 times, if anything, is what I'm thinking. So I mean, again, until we get that, we're still looking for buys. Yeah, still looking for buys. I'm gonna go until we get this freaking confirmation of this peak formation. Hopefully it'll come this week. All right, let's see. I was gonna say that could be a type 3 there if you get a railroad track. No. Let's just keep going. Nothing. Could that be a type 4? Type 4? Type 4? Type 4? Could this be a type 4? I mean, you have a, we need a big candle now though. There we go. See the spikes? 1, 2, there's 1, 2, there's 3 spikes there. That's just gonna give you a really friggin' nasty entry though too, I think. What would be, let's just say 6 pips here. Can you get to here 2 to 1? Yeah, it's almost a 3 to 1. So there's a trade right there, a type 4. A type 4 to basically go to 4 times ADR. is what I would be. If you look at the TDI, though, you'd be like, I don't know, right? You would think that because it's already at the very high here. So, and I could be completely wrong, by the way. So, who knows? So, here, let me stop this. This is, what candle we get in this one? 1, 2, 3, 4, 5, 6. So right here, 6 candles in. You're not even at 1-to-1 yet. So, get out of the trade, really. Take profit, get out, is what I would do here. All right, so we're at 4-to-1, or not 4-to-1. We're at 4 times ADR. We're pretty damn close to 4 times ADR right now, or we've already touched it, right? So we definitely are looking now for a peak formation to form. So if we go up here, you can see we're still a little bit ways from that, or from these two being, together or whatnots, but we're definitely looking for it. That's what we're looking for right now, is for some kind of price action to start that process. Nothing but movement sideways. I was gonna say this looks like a type 2, but man, that just looks so ugly. Yeah, this would be the first leg here, and you can see, if this comes up for this leg here, like you can already see on the TDI, it's already gone. So you can also see divergence as well. Here's a multi-day. This could be a multi-day M, where the first leg is here. This is the second leg, but look at the huge divergence on this thing, on the TDI there. It's pretty big. Look at that divergence. That's called exaggerated divergence, actually. Whenever these two are equal, but the TDI is not, that's exaggerated divergence. So, I don't know. I think this is definitely going to go down. I think. This railroad track and the pullback here. Sideways movement on throughout the London session, so the US session should be good. Hopefully it does. Hopefully it doesn't prove us wrong and like go higher. Like, what the hell would that be? There we go. There we go. There we go. This thing is gonna drop. Boom, 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 boom. Look at that. Hell yeah. There we go. There's your confirmation, I believe, yeah? Almost. This is gonna make this cross. Watch. Today, this is gonna make it cross. Make it cross here. Yeah, watch. Let's just play this out real quick. Boom. There we go. Now, this is a midweek reversal. There you go. There's your cross. So here, this should be your peak formation. Boom, right there. There's your new peak formation. So, if you look back, look at that huge move. Right? Look at that huge move. But look at you went. Look at all the crap that you had to go through. Boom, you had to go through a week of consolidation. You had to go through a week of consolidation. This was a tough week because you didn't have a directional bias. So I went through this week because I had to go through it to show you essentially where we would go, right? But when you get into scenarios like this, where you have a situation where it's in a accumulation week, right, where it's just moving sideways like this, when you get this kind of behavior, you're going to obviously have different pairs to trade. In this case, I didn't go to a different pair because I wanted to play it out and see what would happen, right? But you see all of the different opportunities that we had. And once we got our directional bias, right, we were just solely focused on, okay, how do we find the best possible trade setups on just this pair? Now, personally, I've never traded this pair, so the behaviors of this pair are different than what I'm used to. So you notice how a lot of the trades would have either went to, were either break-even trades. Some went to take profit. Some just missed, take profit. But you could see that there was, if you have the direction, once you get the directional bias, you can start to look for the trades. You know what I mean? But you got to have that directional bias first. Once you have it, then you're good. Then you're literally good once you have it. Okay. So I'm going to stop here because I literally just wanted to get to this peak formation high, so we can complete that cycle, right? And so this should drop now. And so let's do this. Let's go to the 1 hour time frame, and then let's just see how this drops. You see that? So let's measure this out here. 129. So here, this red line here would be 171. So about 3.1 or something, 3.2 times ADR here. Boom, you see that? Where do we go down to? Look. Well, first, we went down to this structure here. So this right here was a full cycle, 169, right? We went down to this structure here. It's 169. Now, the question is, just by looking at this, is this a 4 times from here to here? Yes, this is like 4 point something times. This is almost the same thing, 4 times ADR, yeah. So is this 4 times ADR to go back up, or what? Because right now, right, you would be thinking that this is probably 4 times ADR. But look what happens. Oh shit, broke down. Now what? Where's the next structure at? You see? Now if you do the math, from here to here is 133. And let's see, what is it, 47 ADR right now? So 133 divided by 47, that gives you about 2.8. See that? So from here to here is 1. So here, let's do this. So there's your 4 times ADR 1 here, and then this this would actually be a reset, right? Because it crossed, then it went back down again. So this is a reset here. And so does this go up again? Boom. Yes, it does. There you go. And so you just keep going, guys. But I hope that this taught you something here. Going through this is going to be some tough times that you go through sometimes, and that's okay. But the process is there. You just got to find the right pairs now. All right. All right. So let's talk about homework. So for homework, the first thing is I'm going to send you a book, a PDF book. It's called Inside a Trader's Mind. It talks about 13 laws that a trader should always follow. It's a really good book. It's a really short book. It's not long at all. It might take you maybe an hour to read. But it goes over basically 13 really important laws. I think of them as more like commandments, almost like 13 commandments that you should always follow. Okay, so I'm going to send you the book, the PDF file, in an email, so everybody will get it, and you'll have it by Monday night. You'll have the PDF file, the email. Okay, so that's the first thing for homework, is to read that particular book. Second thing is to make sure that you turn in your back testing journals that have 100 trades or more. Make sure that you turn in your back testing journals with 100 trades or more. Third is continue to back test new pairs. If you've already gone, one pair with over 100, continue on a new pair. Okay, the whole point of this and why you're doing so much of this is to essentially help you figure out what pairs are for you and what pairs are not for you. Okay? So you're going to find, the whole point of this is for you to find the pairs, and then for you to realize and find what setups you actually like to trade. Because there's going to be setups that you absolutely don't like to trade. And some of you have already, with your journals, that have already told me, hey, I'm only looking for this specific trade setups because I feel more comfortable trading this. And that's perfectly fine. I love it because you're finding out what you yourself are really good at. Okay, so continue to back test new pairs. All right, because the more that you do, the better and the faster you're going to get through the hard part of journaling and finding out what are the pairs that you're actually going to follow. And literally, like I just said, identify the pairs that you like versus the pairs that you don't like. Okay, so read the book. You'll have it by Monday night. Please turn in your back testing journals with 100 trades or more. Okay, and that's it, guys. I hope that you enjoyed this week's video, and we will see you in the group session. Have a good one.